Silver was at 37.30 on the spot. Last month, the high was 37.31, 33. So we're very close to continuing the breakout in silver. Yeah, we are at like 14-year highs, I think.
I think that we are going to be seeing $48 silver. There's going to be a $10 move coming up very quickly here, I believe. Now, when it does hit the $48 to $50 level,
Mario Innecco notes that silver recently traded around 37 to 30 on the spot market, near its high of 37 to 31 or 37 to 33, signaling a potential breakout. He highlights that silver is at 13 or 14-year highs, with a strong upward trend despite short-term uncertainties. This aligns with recent market developments, as the price of silver leapt on Friday in London, bursting through $37 and then $38 per troy ounce to hit new 14-year highs. This surge followed U.S. President Trump's shock trade tariff on industrial metal copper, which spurred a scramble to import silver into the U.S. London's midday auction saw silver clear at $37.50 per troy ounce, 1.7% above last Friday's fixing and the highest benchmark price since September 22, 2011, a point on the way down from silver's 2011 peak of $50. Following that auction, silver spot trading vaulted through $38, bringing a weekly gain of 3.5% in U.S. dollar terms. Gold, meanwhile, is lagging slightly, which is seen as a positive sign. Historically, in precious metals bull markets since 1971, silver eventually catches up and outperforms gold. The gold-to-silver ratio is around 89, with 80 being a key level to watch. This aligns with broader trends. Gold rallied over 75% from its February low to April high but has since struggled to break fresh highs. Nevertheless, gold has shown strong support reactions, particularly around the $31.49, $31.67 zone and again near $3,250. Before we dive deep into this video, make sure to like it, share it with your friends, and subscribe to our channel. Don't forget to hit the bell icon so you never miss any of our updates.
Yes, we've been reading that there's been a shortage of silver, a silver deficit for the last few years, and I think that's going to continue. And why is that? Well, because major producers like Mexico, they are making it politically difficult for foreign companies to go there and explore for silver. Unlike gold, there's very few primary silver mining, producing silver mines. A lot of times the mining is done alongside copper and other metals. So yeah, and the price has been kept suppressed for so long, and costs have gone up so much that recycling existing above ground silver, and silver of course is in all kinds of products. So recycling silver is not that economical. It will probably become more economical, of course, as the prices go up. But to start a silver mining business, do the exploration first, and then to develop the mine, get it producing, it takes years to do that. And I think that's why silver has a lot further to go. Silver and gold, ASM, that has done really well, and I'm still holding on to it. I have sold some to buy other miners, like in silver and gold, but technically it looks really good. I think it could go up even more. It's a silver miner in Mexico, and then you have Vizsla Silver. That has come off recently because they did a financing, but it's a good company. I think I have some of that. So those are the two, but there's other silver miners like Pan American Silver. That's a very good company. So you can go down that route if you don't want to buy physical silver. If you think it's too bulky, you go with the miners. I like both. What about trading silver? Well, I haven't been really trading regularly the last few years, but my background is in futures and options brokerage, so I'm familiar with these markets. But recently, a few months ago, I bought some calls in silver, and I still have them. And they expire on the 28th of August. And they're starting to look better. But the problem with options in silver is that the bullion banks control it. Well, yeah, gold is lagging a little bit now. Silver, which is actually not a bad thing, because as we know, and hopefully you know by now, since 1971 during precious metals bull markets, eventually silver catches up and starts outperforming. So this is a good sign. And the gold-silver ratio is still very high levels. I think it's around 89. It might be a little different, a little higher or lower, but I think 80 is a key level there. Silver was at 37.30 on the spot. Last month, the high was 37.31, 33. So we're very close to continuing the breakout in silver. Yeah, we are at like 14-year highs, I think, maybe 13. And by the time you listen to this, we could be a lot higher, maybe lower. Who knows? But I think the trend looks very good.
Mike Maloney predicts a sharp $10 surge in silver, potentially pushing it to $48 per ounce in the near term. He expects resistance around the $48 to $50 range, followed by some sideways movement. However, once silver breaks through this level, he foresees a strong bullish breakout. On Friday evening, July 11th, silver reached a 14-year high of $38.47, prompting Maloney to revisit his presentation titled The Silver Slingshot. Silver could now aim for the $48 to $50 range, levels not seen in over a decade, according to Sunil Kashyap, director at FinMet. The significant rise in silver prices is partly attributed to inventory imbalances in major trading hubs like New York and London, as reported by the Shanghai Metals Market. Daniel Gali, senior commodity strategist at TD Securities, explained that this unresolved market distortion could trigger a series of mini squeezes, pushing silver prices even higher. Gali also pointed out that recent inflows into silver ETFs have further depleted inventories in the world's most extensive silver vault system in London. This trend was accelerated when a wave of silver flowed from London to New York amid previous U.S. tariff threats. In April, the gold-to-silver ratio stood at 102 to 1, meaning it took 102 ounces of silver to equal the value of 1 ounce of gold. Since then, the ratio has dropped to just below 88, approximately 90, reflecting a clear shift in the market dynamic. Currently, it sits at 91, slightly above the 10-week low of 90.5 reached last Tuesday, but still well below the level above 100 seen in April when Trump announced the trade war. This decline supports the broader trend now unfolding historically. When the gold-to-silver ratio is excessively high, the market tends to correct by driving up silver prices to narrow the gap between the two metals, precisely what is being observed in the current environment. Let's get back to the interview.
I think that we are going to be seeing $48 silver. There's going to be a $10 move coming up very quickly here, I believe. Now, when it does hit the $48 to $50 level, you're going to see it probably be repelled and it'll chop sideways a little bit. When it blasts through it, we're in clear air. And this is predicting moves that are huge. And I'll get to those in a moment. As we speak, the silver slingshot has begun. And as it progresses, more and more people are going to rush into this, and that number will probably end up closer to 300 million ounces. When you've got a supply and demand issue, what puts them back into balance? Price. It's the only thing. I'm recording this on Friday evening, July 11th, and silver put in a 14-year high today of $38.47. And so I need to revisit a presentation that I made just a couple of weeks ago titled The Silver Slingshot. Now, I made this at the Investor Summit at Sea a little over 2 weeks ago. And in there, I start with gold, and I show where gold has gone, and I predict that silver is going to be making these moves very shortly. And when silver hit this low, the gold-silver ratio went up to over 123. It was just below 125. at the peak. And I didn't buy gold. I bought silver down at these prices. I didn't nail the 123 to 1 or 124 to 1, whatever it went to, but I did buy, and I added significantly to my position where the ratio was over 110 and another purchase over 100. And I think that we are going to be seeing $48 silver. There's going to be a $10 move coming up very quickly here, I believe. Let's compute what the silver price would be if it went into the same type of bubble relative to the growth factor in the currency supply and other assets since 1980. The numbers below show where silver would be relative to its 1980 price, derived simply by multiplying the 1980 52.50 high. That was the intraday high on the Chicago Mercantile Exchange. The close was $50. Gold had put in this pan and handle or cup and handle formation, and it had put in a triple top, and it was making an inverse head and shoulders when I first saw this. And what happened? I predicted that it was going to make a move like that. It was below $2,000. Now, I'm updating this a little. There's the pan and handle. This is a close-up of that area. But notice that the date is April 12th of 2024. So what's the price of gold compared to silver? 102 to 1. 102 ounces of silver to equal the value of 1 ounce of gold. That was in April. Today, this is at it's just below 88, I believe. So about 90. So which one do you buy? Now, this chart is the average ratio of gold to silver ratio going back to 1687, and it's from an old article from goldsilver.com. And you can see during the pandemic, it hit 123.5 there. Now, when we made this chart, I had them this is all annual data. So we had to insert the day that in the spreadsheet that generates this, the day that silver was peaking at 123.5. But what they didn't do was insert the day where the gold-silver ratio bottomed in 2011, the most recent bottom there. This says 42. It actually bottomed down at 30. And so if you take we're at about 90, and it's just absolutely, in my opinion, destined for below 30. I think range where it's down at 20. We should put it in at least one of those. But if it doesn't, at 30, you're still with silver.
Silver is exhibiting strong bullish momentum, driven by a combination of structural and market forces. Persistent supply deficits, mainly due to limited primary silver production and political restrictions in key mining regions, have tightened the global silver supply. At the same time, inventory imbalances in major trading hubs and increased demand through silver-backed ETFs are putting additional pressure on already low above-ground reserves. These factors are fueling a positive sentiment in the market, with analysts expecting further upward movement in silver as the market adjusts to these constraints. Meanwhile, gold is showing relative weakness, but this is not necessarily a negative sign. Historically, in precious metals bull markets, silver tends to lag at first before catching up and ultimately outperforming gold. This trend appears to be unfolding again, with the gold-to-silver ratio steadily declining from extreme highs. A falling ratio traditionally indicates a shift in favor of silver, reflecting stronger momentum and greater relative upside compared to gold. What are your thoughts on the current silver and gold market trends? Share your thoughts in the comments below. If you found this video helpful, share it with your friends and don't forget to like and comment on it. Be a part of our community by subscribing to our channel and hitting the bell icon. Thank you for tuning in.